How's it going, everybody? It's Stas here. So the stock market had a pretty boring day today. S&P 500 flat overall. The Dow Jones ended up going up 34 points, up 0.1%. And the NASDAQ ended up going down 14 points, down 0.1%. Same exact thing here for the Russell 2000, down about 0.1%. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over what could potentially be next here over the next couple of weeks for the stock market. And we got some very interesting news around Warren Buffett and Berkshire Hathaway as they released their 13F filing. So I want to break down what they bought very briefly, what stocks they bought, what stocks they sold over this past quarter, so we can see kind of what's going on in Warren Buffett's head. And I want to go over what stocks I'm looking to trade, what I'm looking to buy here as we're getting deeper and deeper into the month of August in 2020. So a lot to go over in this video. If you guys find value, as always, hit that like button for me. Join our free Strive Smart Discord chat and Facebook group. Those are linked right down below in the description box. And you can also get 2 free stocks from Webull valued up to $1,400 with a simple deposit of $100. That's also linked down below in the description box. That's just if you guys want some free money. So let's get into the video, starting off with the S&P 500. And I also want to break down in a couple of minutes here, guys, some retail sales data. We'll jump into my Safari tab and go over how the percentage jump in retail sales data compared back to July and actually to June and back over to May. Some pretty interesting numbers there. So overall, S&P 500, we're still struggling under the old all-time high, or actually not the old all-time high, because it still is the all-time high, and the all-time high is around 3390 back in the month of February in 2020. So at this point, I mean, pretty much all week on the 5-day, 5-minute, you guys can see the past 4 trading days, 1, 2, 3, 4, we've been struggling to break out of 3380 to around 3390. So it's very clear that buyers are hesitant to bid the S&P, to push the S&P, the markets in general, to all-time highs, right? That's kind of evident at this point. SPY, which is an ETF that tracks the S&P 500, right? It's struggling at about $338 to about $340. So for this upcoming week, guys, honestly, that's what I'm looking at. I'm looking to see if the S&P is able to get out of 3390. And on the downside, let's say, we're seeing some resistance here because the S&P is taking a look to, let's say, pull down. On the downside, we could end up pulling down to, let's say, 3330. That was an old all-time high from before the February all-time high. I believe it was the level we hit in January, right around 3330. That is where the S&P could end up pulling down to, maybe even down to this 50 SMA on this 4-hour chart, which is this green simple moving average. This has acted as a support in the past, and that would put the S&P right around, let's say, $3,300. So for next week, guys, watch 3330 on the downside, 3390, 3380 on the upside here for the S&P 500. And when it comes down to the Dow Jones, watch 28,200. 28,200, we are still struggling at that level of resistance. And one very good thing that we've been talking about here for the Dow Jones, we've been talking about this for the past couple of days. And honestly, ever since we've seen this move, I mean, it's been a pretty bullish move. And the good move here was when we broke out of that high back in the beginning of June. Ever since we broke out of 27,500, that brought a lot of bulls into the Dow, a lot of momentum into the Dow, and now again we're struggling at about 28,200. So watch for that level for this upcoming week, the next coming weeks here in the month of August and beyond. If we don't break 28,200, which again it seems like we're struggling there, we could end up going back to test 27,500. That would probably put us right around that 50 simple moving average on this 4-hour chart. That could be where the Dow ends up maybe finding support and then ripping back up from there. And honestly, out of all of these indexes, guys, we've talked about this before, excluding the Russell, in terms of the main three here, the Dow is lagging, right? Because the Dow doesn't have as much tech exposure as the S&P and the NASDAQ do. And speaking of the NASDAQ, guys, we almost hit all-time highs yesterday, I believe, but overall the all-time high is still at 11,282, and overall we could be seeing maybe a double top here. This could be a double top, especially if we sell off even further on Monday and ultimately break below 11,000. 11,000 right now is the main support here I'm watching on the NASDAQ, as well as this 50 SMA here on the 4-hour chart. So I'd watch 11K. If that breaks on the downside, we could maybe, just maybe, see some further downside. And of course, on the upside, 11,300, 280, 11,280, roughly that area. If that breaks, right, if we see a breakout of there, that could end up having the NASDAQ ripping even higher. That could be where we see a huge surge, even more momentum heading into the NASDAQ. And one thing that could have suppressed the markets a bit today was the retail sales data. And we'll pull this up here on Safari. I'll link this down below in the description box. And if you guys want to look at the census.gov version here, this is the more in-depth one, quite honestly. You can see all of the different kinds of businesses here in retail, how they've done over the past couple of months, the past couple of quarters, and so forth. If you guys want to see that, I'll link it down below. But for this video, we're just going to go over the more simplistic version. It shows a graph here so you guys can see what's going on with retail sales and how much it's growing. And you guys can see, look at this here. Back in May, I believe this was May at least, we saw an 18.3 excuse me. Yes, it was in May. An 18.3% growth in retail sales from the previous month, I believe. That's what it stands for, right? Here you can see in March we saw a drop of 8.2%. April, we saw a drop of 14.7% as we were in the crisis at that point in time. We still are in the crisis, but that was where it was pretty much the pits of the crisis. And, as the economy started reopening across different states, as things slowly started getting back to normal, although we're far from normal, but, as business slowly started to open, we saw that snap back 18.3% in May, the growth 8.4% in June, and now we got a 1.2% number for July, which, according to the expectations from analysts, that was a miss. That was a pretty big miss at that. I mean, they were expecting 2.3% growth, so it came in about half of what they were expecting at 1.2%. And if we're breaking it down when it comes to, individual segments, individual business types, kinds of business, and again, if you guys want to see that, it's linked down below in the description if you want to see a more in-depth version. But looking at what it says here, I mean, we saw increase in sales at electronics and appliance stores of 22.9% in July versus the 37.6% in June. Gasoline stations, we saw a growth of 6.2% in July versus a 14.8% growth in June. Miscellaneous stores, we saw 6.2% growth in July versus 21.7% growth in June. Restaurants and bars, 5% growth in July versus 26.7% growth in June. And you guys kind of get the pattern here, right? You see how July numbers are much worse than July numbers are much worse than June, because we saw that initial snapback. We started getting a resurgence in cases. We started to get some fears of another shutdown, and now we're starting to see the numbers fall down, right, after that initial snapback. And some other ones here, health and personal care. I mean, this one's not as bad. We got 3.6% growth in July versus the roughly 7% growth in June. But again, you guys get the trend. I mean, the retail sales numbers are dropping. And who knows? I mean, we'll see what happens in August for the August numbers. Will those go negative? I mean, again, we were down 8.2% back in March, 14.7% in April. Will it dip down again to negative 3%, 4%? I mean, that could definitely be a negative hindrance here to the market moving forward, especially heading into the election months, which will also be a big, at least in my opinion, a big hindrance to the market as well. Maybe it won't make the market crash in terms of the election, but I think the market will be very volatile during the time period, which could end up, causing a bunch of people out there to be nervous. But overall, I mean, that is some, retail sales data here. And again, I'll link both of these down below in the description box for you guys to jump deeper into. Now, when it comes down to what I personally did in the markets today, before we get into Warren Buffett here and what he did last quarter, what Berkshire did, as we saw in their 13F filing, what I personally did is I nibbled a little bit of Nio stock today. We saw a big sell-off this morning on Nio, down to about $12.50, and I couldn't help myself but actually scale into a little swing here, a little swing trade position. I ended up buying in at $12.76, so I didn't time the bottom, guys. Nobody out there can time the bottom every time, right? You can time it sometimes, you get lucky, but for this situation, I bought at $12.76. Dropped down to about $12.50, rallied from there, closed at about $13.10, so I'm already up on my position, but quite honestly, I'm swing trading this one. Like I said, guys, I'm planning on holding this stock at least until the mid-14s, $15 range, because I honestly think we're heading higher. I mean, we shook out some weak hands after earnings, some profit taking. Earnings were good, by the way, and I'll link a earnings video down below if you guys want to see a more in-depth breakdown of Nio's earnings. And, I think this is an overreaction, so I ended up buying a little bit into the stock today. And if it goes down to $11, $12 next week, if I bought a bit early, I'm cool with adding even more. But ultimately, I think Nio is going to go up from here. Could we see some consolidation a little bit? Could it be weak a little bit? Sure. But I feel comfortable taking the risk here of at least scaling into it a little bit as a swing. And I'm still in GLD. This is a gold ETF here, and we'll get into a little bit what Buffett did with gold. Hint, hint, guys. Very interesting stuff here, what Buffett and Berkshire ended up doing, which kind of shows where their mindset is at right now. GLD, I'm in GLD. I'm in at about $181.45. Still holding on to this position for next week, as I do want some exposure here to the weak gold price, to this big pullback that gold ended up having. I'm also in Upwork. This one ended up going down about 1.5% today. I'm in at about $14.40. Also, I'm in Netflix, which did take a hit a bit earlier this week. I mean, it's been on a little downswing, but overall, like many of my swing trades, I'm holding them a bit longer term. And Netflix is one of those that I'm holding for at least a couple weeks, and I do see potential in this one getting back up above $500 at some point in time here in the near future, and I'm in at about $495, $496 on Netflix. And Fastly is another one that is not doing too great for me. Today it was down 4%. I'm still down about $15 per share on my position. And Workhorse Group is another one that I'm down a little bit on here. Actually, it's a decent amount. It's not even a little bit, guys. I'm down. I'm in at 1640, so I'm down about 5-6% on my position. But ultimately, I'm planning on holding this one for a good period of time. So let me know down below in the comments, what did you guys do in the markets today? What are your thoughts on retail sales data and the stock market in general? What's next for the market? I'd love to know what your opinions are. Let me know down below in the comments. And now let's get into the Warren Buffett 13F. Very briefly, we're going to talk about what types of moves here were made. And the first move here that intrigued me, and again, like I said a minute or two ago, it shows where Warren Buffett's head is at right now. They ended up buying gold, and not gold as in the metal. Well, it is a metal play, but gold is the ticker symbol of Barrick Gold, a gold miners stock here, which I also believe is in GDX, which is a gold miners ETF. This is an ETF that's comprised of a bunch of gold miners stocks. So Warren Buffett, Berkshire, ended up picking up some gold, GOLD, some Barrick Gold Corporation, which I think is incredible to show, where his mindset is at. He's not looking at buying some of these tech stocks. He's looking at buying more of a hedge play, because we all know gold is a hedge against the economy, is a hedge against the dollar, the stock market collapsing, right? And owning a gold miners company which mines gold is, in theory and in reality, it's a leveraged way to play gold, because if gold goes up in price, they're mining it. I mean, they're going to make a crap ton of money, a crap ton of profits. These businesses will become a lot more valuable. So we saw how Berkshire Hathaway, they ended up buying about 21 million shares of Barrick Gold, a position valued at $563.5 million at the end of the quarter. So this is a very interesting play. And again, just to show where he's at right now, he's looking more at some of these hedges. Obviously, he has a lot of money in banks and Apple and Amazon and a lot of other companies, but so it's not like he's dumping all of his money into this. But the way I'm looking at it is, it's a hedge. It's a hedge play against things going wrong, dollar going down even more than it has, and just the economy collapsing in general. So I like this. And it really, as somebody that has been, and you guys know this if you've been following the channel for a couple months now, as somebody that's been buying GDX, talking about all of these gold miners ETFs, talking about gold, pretty much every single video, seeing Warren Buffett invest into this, being one of the best investors of all time, if not the best investor, this kind of reiterates my thoughts, gives me even more confidence behind my position here in backing these gold stocks. So it makes me feel kind of good inside, guys. Let's just put it that way. It's kind of like when Warren Buffett ends up buying your stock. That's kind of how I feel right now. Although I don't own gold, I don't own Barrick Gold directly. I own gold miners ETFs, but still, it's in the same category. And seeing him buy it makes me feel good. And they ended up doing a lot of other things regarding banks during the quarter. It slashed positions and financials, including Wells Fargo and JP Morgan Chase. Specifically, Berkshire cut its JP Morgan position stake by 61%, selling 35.5 million shares, and now they own about 22.2 million shares. That's what they have left, a position valued about $2.01 billion at the quarter's end. Berkshire also cut Wells Fargo by 26%, selling 85.63 million shares. Could you imagine, guys, owning a million shares of a company, let alone 85 million shares? That is unbelievable. So they sold 85 million shares, but they still own about 237 million shares, and that stake of 230 million shares roughly is valued up to about $6.1 billion at the end of the quarter. So they're trimming banks, guys. They are trimming banks like crazy. Buffett is cutting out of JP Morgan, Wells Fargo, and I believe he sold out Don't quote me on this, but I was reading before, I think he sold out of Goldman Sachs completely. Let me see here. Goldman Sachs, it should say it here. Dumps Goldman Sachs stake, Buffett. Yup, I think, he did. Berkshire dumped Goldman Sachs completely. They're cutting a bunch of these bank positions, and they ended up adding more to Kroger. Grocery chain Kroger here, ticker symbol KR. And I honestly, guys, I don't know too much. I mean, obviously, I understand the grocery business to some extent, but looking at him buying Kroger, I might go deeper and do a deeper dive into Kroger for myself. Not necessarily going to buy it just because Buffett is buying, but I kind of want to see why he's buying. I want to see if there's any value to this in terms of its financials and so forth. So I'm going to look deeper into Kroger, but ultimately he bought 3 million additional shares in the quarter, and the company actually already held about 22 million shares. Actually, no, they owned about 18 to 19 million shares. Then they bought 3 million shares last quarter. So now they own about 22 million shares, valued up to about $740 million. So those are the key moves that Buffett and Berkshire made here. They added Kroger, and the one that I think is the most intriguing, honestly, is the Barrick Gold ad. I think that's very interesting here as somebody that really likes gold in this environment, and I think it's a pretty safe spot, gold itself, to put money in. And the gold miners ETFs, the gold miner stocks, those are a bit more risky than gold itself, but yeah, either way, I'm liking how Buffett's buying that. It's reiterating what I've been thinking. And I'd love to know what you guys have to think down below in the description box. Let me know, as always. And please, guys, do your own due diligence and own research when you're buying and selling stocks. Don't do anything because I'm doing it, Buffett's doing it. Always have your own reasoning behind what you're doing in the stock market. So let's break down some other stocks here very quickly, starting off with DKNG. DraftKings, they ended up reporting earnings today. They didn't do too well. They lost 55 cents of EPS versus the 20-cent loss estimated, and revenue came in at about $71 million versus $66.4 million estimated. And we're back under $35 now, guys. $35 being a big resistance here on DraftKings. For me, I'm not touching it unless it breaks out of 35, finds some sort of support, and really confirms a move back up to the 40s. So it's down 6% on these earnings. Not looking too good. Waiting for that break out of the $35 to $36 territory. And Fizz, F-I-Z-Z. This was actually commented in my comments yesterday. Somebody called it out, and I like it. The pattern is looking pretty solid right now, but the question you have to ask yourself is, why did Fizz end up selling off? I mean, we saw a big sell-off from about $71 down to about $60. That opened up about 15% of an opportunity here on Fizz, and since that drop, why I'm looking at it now is, we've seen since the drop, I mean, it's been consolidating. We've been recovering, and that's why I'm looking at it, right? We're holding the 180 SMA here on the 4-hour chart, about to break the 50 SMA now, so above 65. I mean, this could be a runner here on ticker symbol FIZZ. But again, just look a little bit deeper into why they ended up dropping. This could be something worth noting. And Beyond Meat, it's not breaking out. It's not showing really any signs of a direction here. But the fact that we're holding 125 and we've held that over the past over the past couple of months, pretty much ever since the beginning of May, I mean, I'm looking at it, right? Because from 125, honestly, guys, I think this stock's been beaten down pretty well. I mean, it's down from 170 down to where it is right now. And, from 125 up to 140, I mean, we've made this move many times over the past couple of months. So that's kind of what I'm thinking is in store for Beyond Meat. Maybe around a 10% move up to 140. From there up to 145 could be around a 15% move. So keep an eye out on that. And Space, SPCE, Virgin Galactic, I know, guys, it's been selling selling off. It's not treating investors and traders well, at least the long traders here. Short traders, people that play puts and short, they've been doing well, but for long traders, for investors that have been holding for the past couple of weeks, I mean, yeah, it's not been too great. I mean, the stock's down from about almost $30 per share down to where it is now at about $18.50. But the truth is, guys, this is where you buy. Not saying you're going to buy right here. Again, always do your own due diligence, but buying into the weakness is where the money is made. That is where the profit is made. So don't be scared at looking at a stock that's gone down and, backing away from it just because it's gone down. That's the funny thing with the stock market, right? People see stocks that have dropped down and they don't want to buy. They want to buy only when it's moving up, only when it's at all-time highs. It's funny, right? Because when you go to a clothing store, you see a sale, aren't you jumping and looking to buy some clothes, right? You're not looking to buy full-price clothes. At least that's me, right? I don't like buying full-price stuff. So why don't you use that same logic in the stock market, right? You see a stock, it's fallen down. Instead of freaking out, be like, okay, this could be a sale. Let me look a bit deeper into it. So I think Virgin Galactic is a sale here. You know, we're down about $8, $9, $10 per share off of the highs recently, and I think it's a bit overblown. And I think if $18, $17 ends up holding, this could be a pretty solid bottom, a base, and from here we could end up rallying back into the 20s. So I'm looking at here 20s, some 21, maybe some mid-20s moves. That could be where we're headed. And some other ones here, Ulta, Cheesecake Factory, to name a few. Ulta had a pretty strong day today, up 1.3%, breaking out of 220. We closed above it. Now we're looking to maybe break out of the high we were at earlier this week at about 226. From there, I think there could be a lot of upwards potential in Ulta. Same exact thing here with Cheesecake. Cheesecake Factory held $27 as a support here, and I've been on the channel saying watch for the move from $27 up to $30. That's where I'm looking for Cheesecake to go to next. That could be around a 10 to 11% move on the stock. And two more that I'm looking at, MELI, also known as Mercado Libre. They are an Argentinian e-commerce play here. They reported earnings that were pretty solid a couple days ago, and the stock is down about $130 off its highs. That is around a 10% potential for profit. Looking at that heading into next week, as well as Clorox, guys. CLX, Clorox ended up going down about $20 over the past couple of days from its high here at $2.45, and they actually went down on good earnings. Earnings came in at $2.41 versus the $1.98 estimated. Revenue came in at $1.98 billion versus $1.86 billion estimated. And get this, guys, this kind of blew my mind. This came out today. The CEO said they are making 1 million, you heard me right, 1 million packages of disinfecting wipes per day. That is absolutely incredible. CLX is just churning product at this point. And this is, other than the not the electronic stocks, what am I saying, guys? The tech stocks, other than those stocks, I mean, CLX is one of the companies that has for sure benefited the most in this crisis that we're in. So overall, those are the main stocks I'm watching, some thoughts on the markets, and overall what Warren Buffett just ended up doing through Berkshire via the 13F filing that just came out. So I'd love to know all your thoughts down below in the comments. Let me know whatever's on your mind. Hit that like button for me if you guys did enjoy the video, and don't forget to join our Strive Smart Discord chat if you want to be connected with me and over a couple thousand other people throughout the day in the markets. And you can join our Facebook group. Both of those are free, link down below in the description box. And don't forget to claim 2 free stocks as well, link down below from Webull, valued up to $1,400. That is right down there waiting for you. All you have to do is deposit $100 into the account and you get your 2 free stocks. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Peace out.